Hello, welcome everyone to TradeView Live. I think episode 7, I want to say 6 or 7. I'm losing count at this point. But resuming our bi-monthly, every 2 weeks live webinar. Thank you all for joining. My name is Ben Tracy. I'm your co-host. I lead strategic business development at Vizion, joined here by Vizion's co-founder and CEO, Kyle.
Hey, Ben, thanks for the intro.
Kyle, what are we here to talk about today? What is TradeView?
Yeah, good question. We usually field this question for each of these sessions. But at a high level, Vizion has built a platform called Ion, and there's an application called TradeView. It sits on top of that. And we're able to see a large volume, the vast majority of ocean freight bookings made every single day worldwide. And then we track those all the way to their delivery and understand things about what companies, what products, what levels of performance, both improving and degrading, et cetera. And we help a lot of companies better understand, well, 1, trade intelligence, 2, supply chain planning, and 3, execution around logistics to the benefit of their businesses. So getting a bit more detail into what TradeView is, covers 57% of all global container shipments, 3 times more than any platform you might see out there. And we're the only platform that sees them in advance. So anyone else is offering insights after delivery, but we see these shipments from the time they're booked to the time they turn into a shipment through their transit all the way to delivery. And with that data, we've profiled 1.5 million companies, provided 90-day trade forecasts for all of them. I've mapped the supplier and product networks from the relationships between these companies and the shipment histories, and then have built out an application for very detailed reporting, as well as have included an AI researcher to provide custom insights in a conversational manner. This very powerful platform when you want to know what's going on in the world real time.
And that's really the goal for TradeView Live. We're here to discuss relevant supply chain topics, but more importantly, pull out insights, what data we have in TradeView that can speak to these topics as both a relevant commentary, but also somewhat of a live demonstration as well. Really quick, where does this data originate from that we're talking about that we source inside of TradeView?
Yeah. So over the past 5 years, we've spent sizable amount of investment to connect to more than 270 plus data sources across the world, from ocean carriers to trucking lines to satellite data to rail information to customs information, et cetera. And we've made sense of all of that in the TradeView platform to quickly answer questions to help again to those use cases of trade intelligence, supply chain planning, and logistics execution. But often we're asked, well, how can you forecast so accurately? And fundamentally, it's because several of these key data sources actually are the booking platforms. And we're able to see the requests to ship freight from the time that request first emerges as a booking. And then we watch it again as it progresses into a shipment and it gets delivered through the progress. And so that's how we're able to understand so much in advance in such detail with so many different dimensions of reporting as well, which leads directly to having events like this, where we can answer interesting and tough questions with more forward-looking insights than you may have had access to any other time in your career or in your business.
Great, thank you for that. So let's go back to some of the numbers we were sharing a couple of weeks ago, and really for the last 4 or 5 iterations of the TradeView Live episodes. What's the status of global bookings, U.S. import, and specifically China to U.S. bookings? With everything that's happened in the last 2 weeks, what changes have we seen?
Generally speaking, things are relatively back to normal on a year-over-year basis. You can see for U.S. import and China U.S. bookings, slight increases week over week. But when you look at it year over year, we're kind of in this range of 2.5% positive or negative year over year. So we're back to what you'd expect with ocean freight bookings as it relates to anywhere to anywhere, anywhere to the United States, and China to the United States specifically.
Yeah, it really looks like, our comment a couple of weeks ago about, looking at the the white or the light red sort of tiles, those have continued, whether we have, very slight negative year-over-year change, but also pretty marginal week-over-week increases as well. Things look relatively stable in the last 2 weeks.
Which is good news.
Yeah.
Finally, some days without unexpected reactions, behaviors, activity, etc. So that is generally good news for the end.
And I think a lot of folks were asking, with the anticipation of potentially this 90-day pause on other countries coming to an end, some of these trade deals, for example, the one that was announced with China, still lacking some really important details. Would that cause a sudden surge in bookings to get freight in before potentially higher tariffs were implemented? Or that cause a depression in bookings where folks got scared again like they did in early April? And it looks like neither of those has really happened yet. For the most part, the pattern of booking and shipping behavior has remained relatively stable.
Now, these are still pretty high level. You can't forget that the new normal is 50% tariff from China to the US. So there are some industries we'll dive deeper into in the following slides where it has not returned to normal. These are industries that are getting hit and feeling pain by these tariffs. So we'll dive into that in just a minute. But before we do, Ben, I know you were especially excited to share this information.
Yeah, we basically called our shot. We said, hey, we're confident based on the historical data, based on the talent and techniques employed by Vizion's data science team, that we can predict how much freight is going to be arriving into the US and also arriving into specific ports. We gave the example of US LAX, but we are delivering forecasts for our customers for any US port. So when we said that, again, this was at the beginning of the week of June 2nd, we called the number. We said 593,000 TEU will be arriving into the US in the week of June 2nd. So the actual number ended up being 606,000.
Yeah.
So we were
looking back 2 weeks later, pretty freaking accurate.
Yeah, pretty close. And so we were well within our expected margin of error. I think this is a 3% margin of error.
It ends up being it ends up being 98% on target.
Yeah.
At the end of the day.
So less than 3% margin of error. Really great. And we'll continue to see this week play out. One question is about the most previous week. So we see that middle plot there, the week of June 9th. The only reason we're not giving the actual numbers yet is CBP is delayed by anywhere from 2 to 3 days. So we'll likely have last week's numbers complete by the end of the day tomorrow, by end of day Wednesday. So more updates to come to that. We'll probably put that in a LinkedIn post. Again, what the week of June 9th's forecast, which demonstrated a potential increase to 641,000, how close we were for that.
And what about earlier, not just forecasting all U.S. arrivals, but being able to forecast arrivals to specific ports as well?
So picking the biggest port, US LAX, with probably the most fluctuation, especially with what's happened recently with tariffs, looking at depressed bookings. Gene Soroka, the executive director for the Port of LA, talked about his own forecast and potential decreases they would see in the month of May. How close we were for the weekly arrivals into US LAX. Our prediction was 107,000 TEU. The actual number reported by CBP as of today, just under 100,000. So again, within the expected, I think it was a 7% margin of error. We were well under that.
Well, 6% if you're friendly with rounding.
Yeah.
Yes.
Yeah, so right on track there as well. And again, we'll give an updated modeled against the actuals for the week of June 9th, likely by end of day tomorrow.
Now, a little bit of a shift in terms of geography and in response to, I'd like to say unprecedented events, but maybe more of an escalation. We're going to be focusing on activity around the Strait of Hormuz to see how freight might be getting affected by the recent escalation of the war between Iran and Israel. Iran has started to threaten closing down the Strait of Hormuz in trade. And for those who don't know exactly, the Strait of Hormuz is this pinch point between the Gulf of Oman and the Persian Gulf here. And Iran has multiple naval bases around this choke point and is able to exert some influence over what might happen there. So we did some digging into understanding how are booking activities changing around these ports. And are we seeing a reaction right now to that threat, either heightened trying to get stuff out, or drop off, or business as normal? Because on one hand, you could say this is something of business as usual for perhaps more than a year and a half now, going back to the Hamas attack in Israel in just outside the Gaza Strip in October of 2023. But let's dig into the details some.
Yeah. And to be clear, right now, we don't see any closures in the Strait of Hormuz. The U.S. Navy has a large presence in that region as well. But this is purely going through the exercise, right? So if we wanted to ask TradeView, what about bookings in this region, both for import, so goods going into those ports we saw highlighted on that map, as well as for export, so goods going out? What do those booking trends look like over the last 24 months?
And only for containerized freight. This isn't
Correct.
for tankers. This isn't for break bulk of any sort. And so, speaking of that timeline of going back to the attack in Israel, we charted 2023 from that attack until the end of the year, all of 2024, and then this year to date for import bookings headed to those ports. And again, because there's so many sanctions on Iran, we do not actually see containerized freight going into Iran. If it is, it's likely going via Pakistan or some other route where it will travel over land, etc. But for the ports we get visibility into, so like United Arab Emirates, Saudi Arabia, etc., this long list here, Kuwait as well, we're seeing relatively business as normal for up to, and let me click on this here a second because we can get up to the week 24. Here's our interactive version of the chart. Oh, let me share this tab instead. I just clicked on the chart in the slides to get to week 24 here. So very, very up to date in this regard. But right now it appears that there is not currently much of an effect. Now there has been a little bit of decline, and I'm trying to actually switch back to my other screen now. So
yeah, a slight decline there.
There we go. Slight decline there, but it's also relatively kind of following the bullwhip that's been happening since April in some way, shape, or form.
Yeah. And actually, if we compare that to the year before, there was a similar shape of like a decline around week 13, and then some up and down between week 13 and week 20. So that actually looks very similar to the year before.
Now, if we look into the individual week over week details, we can look here again at week 24, where week over week it's only a decline of 7%, year over year 18%. It's a little choppy in comparison, but perhaps that is a time shift of a few weeks depending on holidays, etc. But when we go back and look at the chart, this is not super alarming at the moment. Yeah. It seems to be within the bounds of normalcy.
Agreed. So there's
now,
more
bookings though.
Yeah.
Slightly higher year over year, and generally it was staying a little bit higher the past few weeks compared to the previous year, but again in that kind of bounds of normalcy.
No, but you're right. We do see a few weeks over in week 7, as well as what looks to be week 10, pretty significant increases in comparison to the year before, and also where we're at now, slightly above 2024 levels for exports. So a lot of those are your polyethylenes, your petrochemical products that are exported out of that region. We can take a deeper dive, and we'll likely do this in the next TradeView Live or in a subsequent blog post about what sort of HS codes, what types of industries are represented in these export bookings that we're seeing elevated this year.
Now, as we were mentioning before, there are still pretty hefty, from a historical perspective, tariffs in place from China to the United States, 50% tariff. It was slightly different for steel and aluminum, but there are some industries that get hit harder by that size of tariff, and apparel being one of them. So this is looking at global to the US weekly bookings for knitted apparel, and going to the top of this chart and looking week over week, we're still seeing year over year changes of being pretty substantial down volumes comparatively. So for the apparel market going into the US, 28% down year over year for the week of June 9th, 22% the week before that, 14% the week before that, and even week over week changes have still been pretty rough. If you look at the weeks before that, though, you saw a little bit of a surge, and this aligns with that kind of pause we saw put in place specifically on the reciprocal tariffs. So perhaps this is a representation of there was a surge in volumes coming in, and now that 90-day window is starting to come to an end, we're starting to see those volumes drop back off week over week. But I think the key thing here is also they're also dropped off year over year.
Yeah.
So it'll be very interesting to watch the apparel industry over the next few weeks as the 90 days comes to an end, and what is the new level of volume from where for this industry.
Yeah, it's really just an astounding up and down for the last 7-8 weeks, from the sudden depression in bookings after Liberation Day. That's the week of March 31st. That's a really significant drop, to bouncing back so significantly, but that's relative to the week before, to that surge after the temporary deal was announced, to now a severe drop in the last 3 weeks. Just really up and down pretty severely. Again, for when you think about companies like Nike and Target, big U.S. retailers like Walmart and J.Crew, impacted by this type of HS code, selling ultimately apparel of any type. It's really volatile right now for bookings.
And whether it's HS code 61 for knitted apparel, similar pattern playing out for 62 non-knitted apparel. So this is industries which are more consumer-oriented products with lower margins are the ones that are being hit the hardest by the reciprocal tariffs and the new tariff situation. So those are the ones to be watching out the most for.
Yep.
But iron and steel is a different tariff situation, and for iron and steel products or semi-finished products that are being moved by containers, it's kind of a similar pattern, maybe not quite as severe as we were seeing with apparel, but the year over year changes are pretty notable with the past few weeks. And the few weeks before that, they were up trying to get shipments in following those announcements.
And this is just a sample of some of the HS codes that are impacted. The changes are happening so frequently. I caught a post yesterday before we even had time to update these slides that now included in these 50% tariffs, Kyle, are the derivative products such as washing machines, dishwashers, right? So these are counted as derivative steel products, completely different HS code, not in the 72 category, that would be impacted as well.
Yeah, and you can start to see iron and steel products as well with HS code 73. This is pretty heavy in terms of year over year. This is a clear pattern that this is a depressed trade now due to tariffs.
Now, keep in mind, what we're looking at is global to U.S., but the primary impact of this is, of course, China to U.S. bookings.
Yeah, because it's also just the outsized impact on the trade relationships in general, being origined in China. Excuse me. Similar story with aluminum, right? Aluminum products, right? We have that kind of the same pattern. Maybe not hit quite as hard as steel because we're talking about teens and the low 20s, but for this week of June 9th, it is a 38% year over year change. So something to be watching. We already have the numbers for essentially up to today. We're lagging this for the purposes of making sure everything settles in right, and we're making sure that we're able to have time to prepare these types of presentations, et cetera. It takes time to put this information together. But if you're looking for a far more up-to-date as of yesterday, reach out to the team. We can get you this type of information. This is available via the TradeView product.
Absolutely.
Now, were there any questions coming through? It looks like there's a few. Or was it Abhishek? We have now a 2-week delay on our blogs, but okay. Yeah, Sammy was just saying the same thing. This information does go out on our blogs as well at visionapi.com. You also have this recording, which will be available via the links in LinkedIn. But any other comments or hot topics you've been fielding this week, Ben, in regards to some of our conversations? There's been questions around port performance has been popping up. I think there's been work around Manzanillo in Mexico.
There's a lot of concern being paid to
Rotterdam as well.
Yeah, there's a lot of concern being paid to Manzanillo right now specifically. So, there's a move that the port is making based on the recent delays, the strikes, that they will actually be open for 24 hours. I believe it's Thursday and Friday of this week. Right now, we are seeing vessel wait times specifically. So that's the time between vessel arrival and berth, increased pretty dramatically over the past few days. And that's based on a 7-day rolling average. At the same time, container dwell is actually down. And that's an indication that once the containers are in the port, they're able to be picked up relatively quickly, or at least faster than they were a few weeks ago. But it remains to be seen, what real impact can be made by the port being open for these extended hours in terms of the operational impact and the metrics. But just know that inside of TradeView, we're aggregating not just shipment data and shipment trends, but import port performance, export port performance, and performance between ports. So as in transit time, trade lane performance by carrier. So a lot of those metrics are aggregated inside of TradeView. A lot of them we're reporting on and publishing in a lot of our content. But yeah, a lot of attention being paid to Manzanillo. And then for goods going into Europe, specifically the Rotterdam port is experiencing significant delays.
Yeah, and I even just here in TradeView brought up the port of Manzanillo. For those who haven't seen TradeView before, you're able to essentially get a Google Earth of the globe. This is all of trade activity as we saw it on the 15th of June. And as I zoom back into Manzanillo here, which I just clicked on, I'm gonna have trouble finding it again. Oh, here we go. We're seeing, several vessels parked outside, awaiting a berth, and then the number of vessels being worked. But here in port performance for Manzanillo, we're seeing the performance trend is stable, but the vessel arrival to gate out time historically is pretty low performance at the moment. 12.2 days from the vessel arriving in the area of the port out here to getting to a berth, to getting the container off, and then getting the container out. And this is that key number of container dwell time, 9.9 days of container dwell time.
And that's at a pretty bad point. It actually has improved just over the past couple of days. So I pulled it today. We're looking at those figures as of Sunday. But for Monday and for this morning, I'm seeing container dwell time reduced down to, I think it was just under 9 days. Yep. And then at the same time, vessel arrival to berth is actually going up. So that would be an indication that these vessel wait times are increasing. We typically see vessel arrival to berth as less than 12 hours or certainly less than 24 hours. So seeing it almost take 48 hours for a vessel to arrive in the geofence of the port and then to receive a berth is definitely unprecedented, at least for this port.
And this is an example I didn't go to any point in time in TradeView. I'm just looking at the past few days to see how the numbers have changed. But even if I change this to the year before and want to see how that port was performing, roughly the 17th the year before, it was 11.1 days vessel out, but still 9 days of container dwell time. So like if you even go back a year, it was still stressful at times.
Yep.
But that 24-hour operation, I guess in concept, it should get twice as good.
Yeah.
In concept.
Yeah, but, we'll see. Yeah. See. And again, these are rolling 7-day averages. So it's likely that if we see a negative impact from one day to the next, that's pretty significant if it's going to impact the 7-day average by this amount. But yeah, more to come on that. We'll be putting out updated statistics for Manzanillo likely early next week.
And MXZLO just in giving some comments about what passes through that port,
Yeah.
what types of products, etc. So we're pulling up the details right now. Here's the shipment history as it looks over the past 2 years. And so May 2025, we saw 61,000 TEUs of freight, but the top products typically going through vehicles, electrical machinery, washing machines, tires, toys, different types of meat. I'm gonna hit explore here so we can get more of the full list and sort this versus just the top 10.
Yeah.
But this is again in the past 2 years, what types of products are going through that port the most. And let's actually sort this to be looking largest at the top. And so again, tires, electrical machinery, bits and pieces of vehicle, washing machines, vehicle parts, furniture, glass, toys, wood, etc. But let's go back one more time and see what companies even, who are the top consignees coming through here. Now there'll be some LSPs, some logistics companies mixed in here as well, but what companies are likely going to be the most affected here? So let's sort that again real quick by TEU over the past 2 years. Our COMEX, let's see here.
And LX Pantos is actually LG Electronics.
LX Pantos.
Yeah.
So probably those washing machines, dishwashers that we were seeing there.
Yeah.
A lot of the importers.
Yeah, GM, General Motors of Mexico. Interesting.
Okay, General Motors, Mexico. Nissan down here as well.
Yep.
6,900 TEUs. So this should mean, with 24-hour operations, these businesses should start seeing containers made available to them more quickly than they had in the past. Ideally. That's the intent anyway. Samsung's down here as well. Tektronic Industries. So pretty heavy volume. And we don't have time for right now, but we also have a filter built in so you can actually filter out all of these forwarders, etc. LSPs as well. We have that identified on the companies and such.
Yeah.
But want to give us a little bit of a wrap up, Ben, with just a minute left here?
Well, thank you for the deep dive. Again, please reach out. It seems that every time we have an episode like this, we get more questions, more feedback. Hey, do you have this? Do you have that? Can I get a sample? Can I get a trial? We're open to it. I've got a little bit of room on my calendar left for sort of demonstrations, but others like Kyle are jumping in to help give walkthroughs of TradeView as well. So thank you again for all the feedback, all the questions. More to come in 2 weeks' time. We'll see you then.
Cheers, everyone. Thank you.
Take care.
Still live.